Welcome to our daily Forex market analysis, and this is for trading on September the 19th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so as usual, we'll start off by taking a look at our calendar here. So the big news for today here, we had multiple pieces of data coming out. We had CPI numbers for the pound that came in below expectations, and for Canada here that met expectations. The biggest news here was the Fed announcement here. And in regards to the Fed announcement, what we have is that they basically came in as expected. So we did have, so we talked about yesterday, we talked about buy the rumor, sell the news. So a lot of this expectation of cutting the rates was actually built into the market. So that's why we have seen that drop in the dollar crosses there as a result of that. So what happened with the Fed announcement? They did cut the rates from 2.25 to 2.0. So they did cut the rates. They are supporting expansionary monetary policy. So they basically said that they're going to stay with the interest rate cuts for as long as it's needed. They did not specify when these interest rate cuts will come into play or when the future interest rate cuts will happen, but they did say that they're going to support interest rate cuts and they will keep on cutting as long as was required. Now, they also said that they may have to do the balance sheet action maybe sooner than they would expect. And then on the other hand, they said that the US-China trade relations were okay. Things were moving in the positive direction, so they're not as concerned about it. So those were the main themes that came out of it. U.S. data overall is coming out, generally positive. The growth is on track as well. So overall, the conditions in the U.S. are stable, and there aren't as many red flags anymore as there were a few months ago, perhaps. Now, they did say that they're doing these interest rate cuts as an insurance to make sure that economy doesn't go into recessions in order to protect the economy. So with that message, that was a message that was expected. Interest rate cuts were expected. It was already baked into the market. And that's why when the news actually comes out, so leading up to the news, generally we see a build up and then the prices drop because, like we mentioned yesterday, buy the rumor, sell the news. So as soon as the news comes out, the market drops. So that's what we have today. Coming up now, we do have monetary policy statement from Bank of Japan. Like I mentioned yesterday, they're not really expected to change things a whole lot. So if they hold the status quo, we shouldn't see a big change. However, if they do express concerns in regards to the economic growth or they're concerned about trade relationships, then that will have a negative impact on Japanese yen, which means the yen crosses could go up. So that's what we have coming up soon here. And then on Thursday here, we have Bank of Japan press conference. This will be earlier in the session, London session there. And then we have, or I should say European session. We also have SNB monetary policy assessment here and their policy rate. So if they do not cut the interest rate, if they hold things stable, then we should not see much of a change. However, if they do go into further negative rates, then that is likely to be negative for Swiss franc, which means we could see Swiss franc crosses go up as a result. So keep that in mind. And then we have retail sales out of UK here. Big thing that we are likely to see, or we are going to see tomorrow, will be Bank of England here. At this point, we are not expecting any changes. So we're not expecting an interest rate cut. We are not expecting anybody to vote in favor of interest rate cut. We are basically looking for a status quo from Bank of England as well, because they are going into a change of leadership. One thing they did mention was that they're likely not going to, or they're going to push the date for that change of leadership further if if UK gets an extension in terms of leaving the EU. So that's the only change that that is going on there. Not expecting anything to change for that matter. So I would say things should just stay the same. But again, if they do mention some concerns about the economic conditions, Brexit, or in terms of the overall trade wars, then that could be a problem, and we could see British pound drop as a result of that. Something to keep in mind here. And then we have Philly Fed Manufacturing Index from the US here, as well as the current account. Current account numbers are important, even though it's not marked in red here. It's marked as low impact news, but right now there's so much focus on trade stuff that any drop in the current account or trade balance numbers is actually negative and can have negative impact on that currency. So that's what we have tomorrow. Now we do have some housing numbers as well, so keep an eye on those. So let's go on to the charts now. As usual, we'll start off with euro dollar. So yesterday we had talked about how euro dollar was at the top of the range. Price has been trading in this range for a couple of weeks here, and price was into the top of the range here. So it has dropped. So now we have a bearish candle close for the day here. So I'm looking for a further drop here back towards the bottom of the range here. So bias here is bearish, but I would look for a bit of a pullback here. So looking for a pullback potentially into 1.1050, and then a further drop to the downside here. So bias is bearish. First target is 1.0980. So bearish bias here. Second target 1.0950. Third target 1.0920. So bias is bearish here for euro dollar. Pound dollar here, we've had a small candle close here. It is bearish at this point, but it's still holding this uptrend. So I would be cautious with this one. Price has been trading in a range here, so watch out for that. But what I would look for would be something like this, price to move back towards the bottom of the range. As long as it stays below 1.2500, I will look for price to drop. Now, should it go through this level, then we're looking for a further move to the upside into 1.2580. So bias is going to become bullish again. But for now here, bias is to the downside, and I'm looking for price to drop. With Bank of England coming up, just be cautious with this one because things can change. But for now, bias is to the downside. Target is 1.2380. So bearish bias for pound dollar as well. Aussie dollar here, bias is to the downside here, looking for price to drop further here. For last several days here, price had been trading in the range. We finally broke out of the range today, and already price has dropped quite a bit. So today's candle close was bearish. So bias would be bearish here, but move seems to have happened already, or part of the move seems to have happened already. So overall bias is bearish here and looking for price to drop. The next target here would be 0.6750. So bias here is bearish for Aussie dollar. New Zealand dollar here, bias is bearish as well. The candle close for today is bearish. So looking for price to drop further here. I would look for a pullback into where it is currently, actually, 0.6330, and then a further drop to the downside. So target is 0.6270. So bearish bias here for New Zealand dollar. Dollar CAD here, this is looking bullish. We have seen price close above this little range it was trading in. So bullish bias here. Now it is into resistance, so keep that in mind. Price is into resistance at 1.3310. So if it doesn't go through, we could see price reverse. So be mindful of that. For now though, bias is bearish. Next target would be 1.3350. And then further up there, we are looking at 1.3380. So bias is bullish for dollar CAD. All right, let's talk about commodities now. First, we'll talk about silver. Silver is looking bearish. We have talked about this level before. So price dropped, pulled back, dropped, again pulled back, and could not break this 18 level. So we talked about this 18 level yesterday. Price did not go through it. We saw a drop in it. So bias is bearish based on the candle close here. So looking for it to drop further. Target is 17.40. So bias is bearish for silver. And only if it goes through this level will I look for the next one, 17.20. For now, bias is bearish for silver. Gold, we've talked about this. Price has been trading in this range for some time now, for almost 2 weeks here. Today, we did see price reject the high and then go into the low of the range, but it bounced off of that. Overall, though, this is looking bearish. Now, it could drop further. So we have price drop, sideways move, and then this one could drop further. So overall, bias is bearish. Next target here would be 1480 and then 1470. So gold is looking bearish. Oil here. Oil, yesterday we talked about this move to the downside, or for the last 2 days we've been talking about move lower. So we do have a bearish move here, and now we are into this previous level here. So we have bearish bias here. However, not the same level of momentum, but nonetheless bearish bias. 57 will be the next target to the downside. So bias is bearish for oil as well. Copper is looking bearish as well. We did get to the level that we have been talking about for the last couple of days here, 2.50, and now next target would be 2.55 was the first target. We are already there. Next target is 2.52. Now, as we can see, this is into support. So if price does not break through the support, then it could get stuck here, and we could see price go back into the range. So that would be something to pay attention to. But for now, bias is bearish. And I'm looking for price to drop further here. So copper is bearish. 2.52 is the target. Bitcoin here, this one is looking bearish here. It's been holding below this 10,400 level, which means this one could drop further here. So target is 9670. So bias is bearish for Bitcoin. All right, equity markets here. We had talked about these yesterday. So equity markets have been all over the place here. We did see a drop and then things pulled back. But we are into resistance here. So for the last 3 days, price has not been able to break the high. So again, tomorrow, if price does not go through the 3,000 level, then we're likely to see a drop. Target would be 2980. So I would say bias is bearish here for S&P 500. NASDAQ here, we have a similar situation. 3 days in a row, price hasn't really held above the resistance level, which means it can drop here. So actually with this one, the bias isn't exactly, I would say the bias is neutral here for both of these, because we do have a large pin in the bottom, which suggests that price could move higher, but currently it's dropping. But it is into resistance. So like I said, if it doesn't go close above today's high, we're likely to see a drop here back towards the support level at 7765. So bias is neutral, but we're likely to see a drop towards the support level here. All right, DAX here. DAX rejected the bottom. We have a bullish candle close, so this one could go higher into 12,470 level. So bias is bullish here for DAX. FTSE here, this one is just going sideways 2 days in a row. It's kind of gone sideways here. So as long as price stays below 73.40 level, I would look for price to drop further. So with this one, bias is bearish for FTSE. And last but not least, looking at Nikkei here, this is looking extremely bullish here. We've had a one-way streak for almost 3 weeks here. So bias is still bullish. Next target is 12,250. And after that, we're looking at 12,345. That will be our target level. All right, so bias is bullish for Nikkei. So that's it for today. You guys have a wonderful trading day, and I'll see you again tomorrow. Bye for now.